Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, the markets had a huge bounce when there was first word of a vaccine that was viable. Since then, the markets have come down, pretty choppy. Is this similar to what we saw when we kept hearing the U.S. had a major trade deal with China, and then we're told, oh, well, hold on a second, maybe it's not ready to go. Yes, it is. No, it's not. Are we going to have the same kind of markets with this vaccine? Yes, it's ready to roll out. No, it's not.
It's funny you said yes, I think so. That's exactly what I thought when I saw the news. In fact, the night that was Monday before last that news, that announcement was made, and in that weekend update, I made the comment. I said, "But can the master manipulators save it again?" And bingo, there comes the news. And it's just like, we've talked about the manipulation, and that's a form of the manipulation. It's not all about the QE and interest rates and, the traditional types of intervention. It's also with this kind of news. And it's just like the China deal. And now what they'll do is, they'll come out, all of a sudden it doesn't have to be stored at 94 degrees Celsius. We got a new way to store it. Now somebody else comes out with a better, and they will milk this thing to death. And that's exactly where my mind went when I heard that. Yes, I think it's a form of trying to entice the market and hold the thing together, like we said before, with bullshit and bubblegum.
Now, that's not always the best formula to keep things together. Why does the market always fall for it? Is it because there's nowhere else to put your money that makes any money these days?
Well, I've wondered about that myself, and I don't guess I know the answer to that. On a more conspiratorial note, I have to wonder if maybe these cover stories are just that, cover stories for something going on behind the scenes. I mean, maybe they step in and somehow support the market when they announce the stories. I don't know. But what I do know is that looking at the structure of the market, that was a mighty peculiar move. And I've talked to other technicians, and I'm not, it's my opinion, and I feel like I can back it up. But, we've seen that sort of thing with oddities in the market for the last 5 or 6 years. And prior to that, you just didn't see it. And so I think that whatever is going on, it is pure manipulation to try to hold it, because the market is trying to set up. We've talked about this for a long time now, but it is this big fat bubble. I think, the expectation has been for all asset classes to peak in close proximity, and I think that process is still trying to take hold. We saw, going back to gold, we saw how gold, we had, evidence where we would start to see evidence, I should say, of the 9-year cycle top, and then, no, it couldn't quite get a toe hold, and then it would continue higher, and then we'd get a little bit of a toe hold, nope, not quite, and it would continue higher. Well, now, I think that we've seen, let me preface this, within the expectation of pretty much all asset classes peaking together, I think now we've probably seen the 9-year cycle top. We've got an intermediate term top that tells me that odds are we've probably seen it. Now, can they pull a rabbit out of a hat again? Yeah, maybe. But it looks like we've seen that with gold, and I think other asset classes, be it crude oil and the CRB and housing, equities, etc., are still in that longer term process of setting up for this massive, massive top that's in the making.
We'll have more from Tim Cyclesman Wood right after this.
Value from success. growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Wood. Tim, I'm hearing complaints now that there hasn't been another round of virus relief or major programs from the American government, and that's why perhaps the market's looking shaky. But stepping back, should companies that need help be bailed out?
You know, my opinion, no. Because, I mean, what good is a Band-Aid on a gunshot wound? I mean, if you're going to continue to play this game with shutting down the country and, you know, going down this same path, you know, what's a little bit of bailout money going to do? And then you combine, you know, these shutdowns and this alleged virus issue with, the underlying economy and so on and so forth. And I'm like, you know, my opinion, no, let it go. I mean, that's the problem. That's how we got here. That's part of what's wrong. We need the flushing.
Studies have shown that bailing out the banks after the 2008 financial crisis perhaps cost taxpayers a lot of billions of dollars that was wasted because the behavior of the banks didn't change. Is that what you're saying?
That's what I'm saying. Now, on the front of, let's say, the local business, so that people understand what I'm saying. Look, I feel bad. Let's pick the local barbecue joint, for example, the local automotive shop, whatever. Those guys who have put their, you know, their life savings and blood, sweat, and tears into their local businesses, of course, it's a tragedy to see those businesses go out of business because of the shutdown and that sort of thing. But again, the reality of it is that by further indebting those businesses with some sort of a temporary government bailout, when you're going to continue down the same road with the same crappy economy and the same practices of closing down, are you really doing them a favor, as tragic as that is? That's what I'm saying. I'm not being insensitive to the smaller businesses and that sort of thing. Not at all. So no one misunderstand what I'm saying about that. But of course, the larger scale bank bailouts and that sort of thing, no, I don't agree with that. And you're right, it just costs the taxpayers and, you know, lines the pocket of the fat cats. So I don't agree with that either.
Wasn't it J.P. Morgan gets bailed out, and then the same year they get bailed out, they gave their executives massive bonuses?
That's what I'm saying. Yeah. Yes.
Also, General Motors was bailed out by the Canadian government. The government was given shares, and then they sold them at a loss.
And all the while they keep the market, you know, artificially high through the manipulative practices. You keep the sheep at bay, you keep them quiet because their 401ks are good and everything's good, and they tell you that the economy's fine, and, you know, they can just continue doing what they're doing. Nobody cares because, hey, everything appears to be okay, and, you know, it hasn't affected me, so I'm good with it. And that's the mentality, and so that's, again, part of why we're where we are.
So, Tim, do you think the markets are ready to roll over and it's time for another major correction, perhaps one bigger than we saw in March?
I think that we have been at a very, very critical cyclical juncture. And what I have to see, I know this is probably not the answer you're looking for, but it's the best answer I can give you. In order for a market to go up, we need structure that is positive. In order for a market to go down, we need structure that it's negative. And I know that may not make a lot of sense and that may sound very simplistic, but identifying and understanding the structure that you see, the cyclical structure I'm talking about, tells you what you need to know about, you can set expectations based on that. And once we see structure, just like back in early February, we talked about this. I said, my expectation was, I think it's going to set up quickly. It's going to seemingly come from nowhere. People aren't going to understand what has happened. And then boom. And that's exactly what happened. And I think that's the kind of thing we see here. We have to see the structure. By the way, I did identify that structure when it's set up, and it was in the letter and in the short-term update. So what I'm saying is, in the current case, we have to see the structure. How quickly it sets up, when it sets up, if it's next week, next month, or 6 months from now, or 10 years from now, I don't know. But when it does, we'll see it. And whenever that happens, then yes, I think that this has been like we talked about, it's like a broken record, but this is the giant bubble top that it is, and it just goes on and on and on, and it's a continuation of the same thing. It's not a new bull market. The economy is not great. It's all a facade. And at some point in this whole great reset thing we're going through, this thing's going to come unraveled. We will see the structure set up, and intervention or whatever is going to fail, and down it's going to go.
We'll have more with Tim Cyclesman Wood right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, you briefly mentioned gold. Is gold nearing its top?
Yes. In a normal world, we should have the 9-year cycle top now in gold. And I say in a normal world, in a world where the markets are allowed to behave according to, a lack of extreme outside influences with, due to manipulation. That's not an excuse, it's a fact. And so in a normal world, yes, it looks like the 9-year cycle top has finally been seen in gold. And like I said, to reiterate the point, the expectation is that everything pretty much sets up together. When I say everything, all asset classes, gold, housing, crude oil, the CRB index as a whole, the whole commodity complex, so on and so forth, including equities. And I think that gold may be actually leading that. And then another one, the Baltic Dry Index, looking at it looks like it's leading that. And so it looks like that we've seen a rollover there with some structure taking hold. Again, can it be somehow fixed or manipulated? That's the question. But we're starting to see, we're at an important cyclical juncture, and we're starting to see some of these things trying to take hold here. And so, yeah, we're at a critical spot.
I read a report that said the U.S. Treasury has printed more money in the last few months than in the last 20 years, something like that. And yet we haven't seen massive inflation from it. Do you expect massive inflation to happen eventually?
Eventually, maybe, but I'm not seeing it now. And see, that's the game that is being played. You're looking at, the rise in long-term interest rates, for example. And then the little bit of a pop we've seen, I say the little bit because a little bit of a lukewarm pop that we've seen in commodities, that's trying to be spun from some of the stuff I've seen is, oh, look, That's inflationary. This is good for the economy. And it's not. Gold's not telling us that. And then whenever you look beneath the surface looking at the interest rates, it's not telling us that. It's just, I think the green shoot, I guess, if we could borrow that term from back in 2000, whenever it was they used that, I think it's a desperate act to convince people that somehow things are improving. I heard some things being said about the employment numbers, how great they are, but when you look at it, okay, there's been a big bounce back, but the last time I looked at the numbers, they were still at the lowest level going back to the 1940s. And so, I can't remember what the number, it was the employment number or unemployment numbers, and it had bounced back, but it was at the previous lows going back to the 1940s. So, okay, well, you've had a bounce back, but look at the level. And so that's the kind of thing I'm saying is spin the most minuscule thing into being something that it's not, and it's just all a facade.
Could the true state of the economy be best described by a situation I heard of where someone said, I just had some food delivered by Uber Eats and the driver was in a Mercedes?
Yeah, I think that's probably as good a description as any.
Getting $15 an hour, and yet he's in a Mercedes Benz. So a nice shell. It looks pretty, but inside, perhaps not so much.
Exactly.
What do you think's going to happen to crude? Will demand come back? And of course, we're hearing OPEC maybe spooling up production, Libya getting back in line. Iran, if they get another deal, may be allowed to sell oil. Is that a good or bad picture for people in the energy business?
Oh, of course, it's a bad picture, but I think it's trying to be. I think what they're trying to do there is that's noise, that's news, in my opinion, to try to manipulate the price of crude into continuing higher, because it too is at a critical spot where it is trying to roll over out of this cyclical turn point in which we sit. And I think that stories like that are another, just like the virus story, the vaccine story, an effort to try to stimulate prices while we're at this critical juncture. Maybe that game can be played a little while, but I do think that crude oil is, just like all other asset classes, it's just a matter of the setup taking place. And, if you look at the chart, crude oil has been basically flatlined for 3 or 4 months now. And, what's going to drive the demand with the economy? And they're talking about a global shutdown again. I mean, we're seeing that handwriting on the wall. I don't see it. I don't see it in the charts, and I don't see it looking at the fact that, I just don't see any promise in the economy is what I'm saying. And then when I look at the charts and what I think I know from the cycles, I don't see it. I think crude oil is trying to peak like everything else.
And the markets overall, I kind of think of it as an elephant balancing on the edge of a razor blade. It doesn't take much to push it over.
No, and it's going to set up, I think once it happens, it's just like in February, it's going to set up quickly, very, very quickly. And understanding that structure when it sets up is going to be key. And like I said, I think gold is there. I think housing is trying. I think crude oil is lagging a little bit. It's not quite there. Equity is not quite there. But everything is, we're in a spot where it's trying. And then the dollar, I think the dollar is trying to put in an intermediate term low, and it better hold. It better hold. Bonds, I think we probably have seen an intermediate term low. If not, there's one more little small cycle down, but we're close if we're not there to the intermediate term low in bonds. So I think interest rates on the long end will come back down. I do think it's counter trend, but I do think they'll come back down and probably have seen the low there.
Should we be looking at another warning from inverted yield curves?
I don't,
or does that work anymore?
I don't know that works anymore. It's going to be hard to invert at this point, and it's like with the short end already zero bound, I wasn't anticipating a bounce on the short end. I think we talked about that. I was anticipating, when I say a bounce, I'm talking about in rates as the bond came down. We was looking for, a bounce in rates on the long end, which we've seen. And now I think that that long end is going to come back down, and it may pull the curve down, but I don't know that we can mathematically even see an inversion at this point.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.